AVI is an investment and management company focused on branded consumer products. Apart from its significant food interests, it also owns beauty brands such as Yardley, Coty and Carvela. AVI has a market cap 20.3 billion rand, price to earnings ratio of 17.7 and a dividend yield of 3.7%. Either of you wearing Carvela shoes today?
Yeah, I'm not quite sure if that's a beauty brand or a footwear brand, but I think the reason it got sort of lumped together is AVI, in its reporting results, puts those businesses like Green Cross, 80 Spitz, and then these brands like Coty and Yardley. They have a factory in Cape Town which manufactured this stuff and has for years and years and years. I think they sell about R1 billion worth of product out of that pharmacy and sort of beauty products area. And it makes a solid, 160, 170 million rands of profits a year. So it competes with obviously some of the imported brands and agencies. So what you'll find in that industry is that the foreign players have a local distributing partner for their Chanel No. 5 and this and that. Everybody's spending an absolute bomb on ads in the glossy magazines and wondering whether they shouldn't take that ad spend online. I think it's a solid contributing business for AVI.
Daniel, Paul doesn't like drawing out a discussion around the South African consumer and whether we are going to see them under pressure when interest rates rise. Right. What are your thoughts on the South African consumer?
Look, at the risk of making Paul upset, I think the South African...
Impossible.
I think the South
Don't
African
worry
consumer,
about it. I want you to make him upset.
I think the South African consumer is under quite a bit of strain. You can see from the different results of the different companies coming out where that strain is more focused. So companies like Woolies, which have been doing better, suggest that the upper income, the LSM 9 to 10, are under somewhat less strain. But the lower income and the middle income, they have high debt levels, they have escalating inflation to deal with, things like utility bills, petrol prices. I think, Bronwyn, what you said earlier is hitting the nail on the head, that we are at multi-year interest rate lows. The currency is very weak. So that means that that's a danger for keeping the rates too low for too long. If the currency blows out, you will have to respond with some sort of interest rate action. So I think a rate hiking cycle will be a lot closer than 2012, Paul, 2020. And I think when that happens, the consumer is going to be under a hell of a lot of strain.
Paul, has Daniel upset you?
No, not in the least. Being under pressure is part of the human condition. It would be great if we all had infinite spending power, but that's never the case. And it's just in the natural course of events. Humans are always worried about this or that, or forthcoming elections, or global stress, or financial crisis, or airplanes falling out the sky. It doesn't mean anything. People will continue spending whatever they have to spend. Sure, there will be times when certain people feel more inclined to get out there and get stuck in, but in reality, I don't think our basic human urges ever change. It's just the conversation on TV shows that changes.
Hot or not, Paul, on AVI?
Yes, I like AVI because of its overall business. At 60 Rand, it's certainly bounced a little bit in recent months, but I'm still hot on it, yes.
Daniel, hot or not, AVI?
The one thing to highlight from the most recent results is that the dividend cover dropped to 1.25 times. Now, I think there's a handful of stocks on the entire JSE with that level of dividend cover. So it shows you what an excellent cash generative business this is. So purely from that point of view, I'd say it's hot.